Hi, my name is Bo Jennings with Live Urban Fort Worth, and I'm here today with Martin Garcia of Mag Law and Melissa Gallagher of the Gallagher Firm. Our topic of today is property taxes, what you need to know about them, what you can do to combat them, and how they're going to look in Tarrant County for us. Hopefully this is some really good information that you guys can use and apply to yourself and your personal situation as a homeowner. So we're going to start with Martin. Martin, what can you tell us about what's going on through the legal aspect and share a little bit about property taxes you know?
Yeah, I can, absolutely. And I want to back up and start with, we never fluff or give you bull. And we're doing this not just for the value in what we're presenting, but I wanted to point out that not only Bo, myself, personally use Melissa for tax protests, but she helps my family, my clients, and this is all a great referral circle here that I'm sure you all can benefit of as well. And wanting to know more about what I'm seeing in the legal landscape, as both of you are, but especially Melissa getting the tax calls, is sending me so many referrals of people inquiring of putting their property into a trust, right? We do that often here for many reasons: tax, anonymity, family planning, estate planning, etc. Not just deeding property from an individual to a trust, but maybe the individual to an entity. Lots of implications there, tax-wise, homestead-wise, that we can get into the weeds in. So that's pretty much what I'm seeing constantly. My staff can attest to that too. And another point to cover here is, I'm a title insurance guy, right? We not only practice real estate law up here, but we close title insurance upstairs. And when you are the purchaser that goes through a title insurance transaction, you are the insured. We're issuing you an owner's title policy. What if Bo closed a house with me? He's the insured, not his trust or his entity. So other things to consider, whether you move title to a trust to help you out tax-wise, but does your insurance policy no longer apply? So a lot of things that we see.
This is also that time of year, and I just got mine. So not only am I going to speak to you from the lens of a real estate broker, but also a homeowner myself. I just got audited, and one thing that I found really interesting and that I was waiting to see when my mortgage provider got back to me and servicer got back to me on what my mortgage was really going to look like in 2024. Because in Tarrant County, we've got some of the highest property taxes in the entire state of Texas. So like so many of us, including myself, year after year, we kind of keep getting hit with these property taxes, which seem like a pretty big punch in the stomach sometimes, because for many of us, our taxes are going up to the point where our monthly mortgage is going up a few $100s a month, which that's the bottom line that we're looking at. This year is a very interesting year because along with property tax hikes, we're also seeing insurance, homeowners insurance go up. We're seeing some really, really high insurance rates go up. So when we see a property tax hit going up and then coupled with homeowners insurance going up, then that really creates a much larger bottom line, which is your mortgage is going up. So with that said, I find the benefit of Melissa's service to be very great. So in my experience, not only has she gone to the table to combat those increased rates, and how does that work, Melissa, when you go to I guess a hearing for somebody's property tax protest like you've done for mine in the past? How does your team go about doing that?
As you chew on that question, I want to throw a sidebar that we were discussing earlier too.
I
If
have
there
another sidebar
are any insurance folks out there that want to comment when this is on social, we want to know why is the pool so much smaller? Why not just the rates going up, but why is it so difficult for Texans to insure their homes, their cars, their investment properties, etc.? So
yeah, and just a sidebar to your comment, I know a lot of people know this, but some people don't. You know, what makes up your mortgage payment is not just the money that you borrowed to purchase the house. So you've got the principal that you owe on the house, and then you're being charged interest on the amount that you borrowed. The other two aspects of that are the property taxes and insurance. So those four components are what your escrow teams are looking at when they are trying to determine what does this person need to pay in the next year. And so half of that is taxes and insurance, the other half is your principal and interest. And the taxes and insurance are really what is pushing people out of their homes.
It's true, and that's why I mentioned bottom line, because what we're doing here is coming together to provide some information for you guys to use, because I think a lot of us sit there and we see the insurance go up, or we see another increase in property taxes, and we're scratching our heads like, you know, this is my bottom line. My mortgage ultimately just went up $300. For a lot of people, that's your grocery money for the month, or every couple weeks, or that's the money that you had intended to put your kids in Little League or a car payment or whatever. This is a significant amount of money, and that's why protesting, we have the option and the opportunity to protest our property taxes. The interesting thing about insurance is you can't control it. You can't call your insurance company and say, hey, I really don't like the increase that happened.
Yeah, let's protest.
There's not a lot that you can do there, but one thing that is in your control to an extent is the services that Melissa offers with her team. One of the beauties about the services, and she can explain more on the dynamic of how this happens, but if she goes to protest your property taxes the first year, and if those property taxes can't get reduced the following year, you do that. And that's part of that initial service, correct?
Right, so some properties will qualify for the firm's guarantee. There are some parameters in place. Obviously, you can't have a homesteaded property where your appraised value is $100,000, but your market value is $600,000, because there's almost no possibility that we're gonna reduce your tax liability when you have that big of a disparity between your appraised and your market values. Because the way that you affect your tax liability is by getting your appraised value reduced. Now, they don't make it easy. You can only protest your market value. So when you go in there, you're protesting your market value, but because of the way the laws are written, your appraised value, which is the starting point for calculating your tax liability, your appraised value can never be higher than market value. So say you go in there and your market value is $500,000 and your appraised value is also $500,000. Any amount of reduction that you get is going to lower that appraised value, which is going to lower, in effect, your tax liability. If you've got a big disparity between those numbers, say your market value is $600,000 and your appraised value is $500,000, we've got to get them to agree to lower your market value by at least $100,000 to even start affecting your tax liability, because those two numbers kind of work in tandem. But our services, you know, the appraisal districts, especially in counties like Tarrant County, hundreds of thousands of residential properties, there's obviously not appraisers going out and individually appraising these properties. They run it through kind of an automation system. So if you think about kind of how AI works or any kind of automation, there's going to be errors when there's not some human oversight. They run all of these properties through an automation system and it spits out a value. They're looking at various data points where they attempt to match like with like. And if any one or more of those data points is off, then the comps that they're pulling in are going to not be the right comps.
Right.
And so what I'm doing, and the reason why I only take a certain number of clients each year is because I like to personally look at every single case that I take. Unlike some of the big box protesting companies, they kind of just go in and they're more about quantity, you know, over quality. So, but I'm looking at every one of those data points. So I'm looking at the quality of the build. I'm looking at the actual condition of the property. I'm looking at things like the year built and the effective year of the property, because condition of the property and effective year work in tandem. I'm looking at the square footage, the other features. Are there any data points that are off? Because if you change the condition of the property, you're looking at a whole different set of comps.
Right.
If you're off by 40 square feet, that can change all the comps that are pulling into your grid, and that can change your value.
Sure.
So we're looking at all of those individual aspects and finding where the errors are. Because if you find one or more errors, the cumulative effect of finding those errors and pulling in the comps is usually a reduction in where your value should be. And at the end of the day, it's not about paying no taxes. It's about making sure that you're paying your fair share of taxes based on a fair and equal value when compared with everybody else.
Some people in the political world would say that they want no taxes, right?
I mean,
on their agenda.
yeah, everybody would like no taxes, but then we would have no schools, we would have no roads, we would have.
Right.
And shout out to our local legislators for all the sessions, special sessions that they went through all of last year, and that obviously impacted homestead exemptions and tax liabilities. How do you think that's going to translate into your world?
Yeah, I mean, I've got a whole list here
I'm
of
sure.
some of the great things. Now, one thing to note that it's not a permanent fix. So what the legislature did, it was a fantastic Band-Aid, but it is a Band-Aid that's gonna come off. So it's only gonna last a few years, and then we're gonna have to either vote it back in or come up with something new. But essentially they passed $18 billion in tax relief, and they moved the homestead exemption. So if your homestead is worth $200,000, you were getting a homestead exemption of $40,000. So they take your appraised value of $200,000, they take $40,000 and only tax you on the remaining. Now your homestead exemption is $100,000. So now you're only being taxed on the remaining $100,000. So this kind of translated into roughly $1,000 to $1,500 in tax savings for most people. So on average, some people saw more, some people saw less. I will note with homesteads, and it has been in the tax code, so I don't know why it's suddenly a thing, but maybe it's because Tarrant County decided to like actually start abiding by it, I don't know. But there is a 5-year periodic recheck on homesteads, so if you get something in the mail from the appraisal district that's saying you need to reapply for your homestead, and you know that you applied for it, 2 years ago, it's because they've implemented a new system where they're starting and they've gridded out the entire county, and so they're just starting and going grid by grid, section by section, and sending out new applications. However, if you ever have a question on whether the information that you got in the mail is actually from the appraisal district or from a different company, scan it, email it to me, and I will check, because there are a lot of companies that pull down lists through open records requests of homesteaded properties and then do mass mailers. And what they do is they include a section where once you sign that document, it assigns them agency over your account and your property. And so when they file that paperwork, if you are owed a refund for overpayment of taxes, that refund actually goes to them first, and they take out a percentage.
Yeah.
And then they send you the remainder. So
Incredible advice. I know everybody that closes here hears it from our escrow officers, and someone just yesterday that he and I have closed multiple times asked me again, hey, I got this from Austin, and I haven't seen it yet, but I've seen the ones that look like they come from the county. I said, well, you know the drill.
They look pretty real too.
They're all gonna look real, and when you don't read fine print, that says, yeah, they're my new agent, and not only are they gonna take a cut of potential tax rebates, refunds rather, they're also gonna take a cut for filing something that the title company already did for you. That just happened yesterday, so.
And that you can file for free yourself, but also a lot of those clauses make them, when they designate them as an agent, they now receive all of your mail. So not all of your mail, not your junk mail, unfortunately, but they receive your information from the appraisal district. So your value notice could go to them, your tax bill could go to them. A lot of that correspondence will then go to them as the agent.
Right.
So it's important to keep in mind.
Yeah, when you see a letter come to you that you're a little bit unsure,
just ask.
yeah, just ask one of us and we'd be happy to help you. There's a lot of things that we can see in those letters, and the way that they put them together, they do look very professional, and we don't want you to get caught up in any sort of, some are even just fraudulent out there. So, and they do look like they're from the Tarrant County or whatever.
Your lender.
Right,
Yeah.
right.
Yeah.
They may not be. One thing I wanted to say on what Melissa was talking about a little bit when it comes to determining the property taxes that you owe based on how the appraisal district puts those together. Something that might relate to you guys and anybody that's a homeowner. Even before I ever got into real estate, when years and years ago when I was renovating houses, I always used realtors, but even with a strong realtor in my corner, I would get excited and I would get on, search, like Zillow, like search platforms. So when you see a Zestimate out there, that's an algorithm that they used that determines their value of your house. But we don't ultimately know what that algorithm is. Maybe they're taking a 1 mile radius around your house, and in that 1 mile radius, there could be a house, a quarter mile down the street from you that needs to be a total tear down that's worth, lot value. Say it's worth $60,000, but a quarter mile in the other direction, there might be a $2 million home sitting there. So it really, really wildly skews the value of your home, and that's why often I get calls, I'm sure Martin does, I know you do as well, where an individual calls
Probably
me
called
up.
you and asked you, why is my Zestimate so low now? It was up here.
Yeah, or even when I sit down with folks to sell their house and I run really, really tight numbers, we're running really tight comps, a real microcosm of the value of where you live, and they're saying, hey, well, my Zestimate says that my house is worth $400,000, and really and truly that's not really the accurate value of it. Whether it's high or low, it doesn't matter in this case, but what matters is that algorithm that Melissa's talking about. So they're pulling in homes that really don't need to be comped next to your house, and that's where this becomes valuable, is because she's looking at accurate data. So when she goes to protest, she can say, hey, this is the value of your home, this is where your taxes need to be, and it doesn't need to be this other value because there's a $2.5 million home next to, my home's not worth anywhere close to $2.5 million, so I don't want the appraisal district looking at mine and lumping that in there and increasing my taxes, right?
And part of it is whether you hire my firm or hire a different company or protest yourself, you should definitely protest your value, because there's always going to be at least one thing that's off. And it's not you that has the burden of proof, it's the appraisal district. So when you go in there and you say, listen, my square footage is off by 100 square feet, that essentially nullifies every bit of evidence that they have to offer to support the value that they've proposed. And when you go in there with, one or more of those data points that are off, you have essentially proven your case. Now, obviously, you have to contend with the people that are sitting across the table from you, which you've got yourself or your agent representing the property owner. You've got the TAD appraiser who's there to defend the computer-generated value that's spit out.
Objection.
Right.
And then you've got the ARB, the Appraisal Review Board members. And you've got to convince the Appraisal Review Board members. Now, Appraisal Review Board members are just members of the general public. They're not real estate agents, they're not realtors, they're not brokers, they're not...
But they can be.
They can be.
Yeah.
But there's no requirement that they're an attorney or that they've worked in the real estate industry at all. So these are just your normal everyday people that you're talking to. And I can tell you that over the last several years, a lot of people have turned out, and the ARB is running at a deficit. They do not have enough members of the general public there, which is why there's also been such a backlog and people waiting in the waiting room, waiting for a panel to get in and do their protest, to have their 5 minutes, in there to protest their values. So the ARB is hiring. They pay $185 a day. It's mostly seasonal during the summer. So if you have the type of job where you're working part-time or you work seasonally, you should strongly consider going and affecting some change, and especially if you're taxpayer friendly, you know, and you are willing to look at the evidence that's brought in by property owners, because that's the biggest thing, is we don't want a bunch of people on the ARB that are there to just rubber stamp the appraisal district, because it is the appraisal district that has the burden of proof. What we should be doing is really scrutinizing whether or not they are bringing proper evidence to the table and whether that evidence is reliable.
Well, and that's a good word that you said, proper evidence, and that's what this using a service like Melissa's is ultimately all about, correct?
Right.
And
I mean,
a lot of those real estate investors, that I see every day, and they're gonna see this on my social, consider that. You're experts in not only providing evidence to folks that you're making an offer to, or when you're wheeling and dealing your investment properties day in, day out, go and be a part of affecting change, because you know what you're doing there.
Absolutely agree. And I'll share something. Melissa and I have worked together for a long time. Live Urban Fort Worth exclusively refers anybody that calls about property tax to Melissa, and Martin has been in my corner as a real estate attorney for many, many years now. And along the lines of what Martin said, if you know me, I don't blow smoke at anyone. I actually believe that real estate is an industry of a lot of smoke and mirrors, and I do my very best to change that. But I'll give you a little bit of a market update and how this relates to property taxes right now. I'm a real estate broker, so I'm in the business of buying and selling homes. But what I'm not in the business of is, like I said, blowing smoke in any way. One thing that we've seen, I know there's always curiosity out there on how healthy is the market, how are we doing? Anybody that's a homeowner, you obviously want to know. For most of us, it's our biggest asset. If your back's against the wall and you have to sell, is it a good time to do it? We have, in the last month, we've seen about 11% increase in mortgage applications. So buyers are kind of waking up from the winter, and we're seeing a slight increase in inventory. So a few more people are out there looking to sell. As far as interest rates go, the Fed is not happy with the inflation rate right now. So until inflation comes down a little bit, we're not really going to see interest rates significantly drop. It looks like if they do drop, it's going to drop towards the end of the year. So for most people, buying and selling, it's going to be, is a life change happen? Do you need more space? Do you have another child? Are you going through a possible divorce? Some kind of life change that forces you to move. We're not really in the market right now where a lot of us, maybe we just want to live in a different neighborhood or a different part of town, and we purchase or sell for that reason alone. So with that said, I just want to be very transparent back to kind of the audit that I got. Of course, we get little property tax increases every year. In the past few years in Tarrant County, like I mentioned, some of our property tax increase have been pretty large, substantial, very noticeable, which plays on your bottom line, your grocery money, and all those things that I had to say. But also, again, take a look at your property tax increase coupled with your homeowner's increase. And for some of us, and I will tell you, I was a school teacher for 7 years. I very, very much believe that everyone deserves to own a home. I don't care who you are. I think that people that serve their community deserve to live in the communities in which they serve. I can tell you, when I was a school teacher, my life pretty much was living paycheck to paycheck. On a current year like we have this year, a big property tax increase along with a homeowner's increase very likely would have pushed me out of my home. So these are some things that people are facing. If your mortgage, like Melissa explained, what your mortgage is comprised of, if your bottom line ultimately means that, in 2024, you're going to pay $300 or $400 more a year that was unexpected to make that mortgage payment happen, the one thing that you do have some control over here is reaching out to Melissa. If you have legal questions about your house, Martin's the guy to call. He's in my corner and he'd be in your corner too. But I really, really think that is that one angle that you can go at that could reduce your mortgage if Melissa can get your property taxes down. So one thing I know you're probably all curious about, Melissa, what do your services cost? Because in my experience, paying for your services very much was worth the month after month after month of paying that increased property tax rate, which if I hadn't reached out to you, I ultimately would have been paying. Most of the people that I know that have gone to protest tax themselves have not been very effective at getting them down. I do know a few people that have, but I think they really hammered it from what they told me, and really, I don't think they just reached out one time. I think they were really going after it. But what do for everybody listening, I think it's a huge thing. What are your services cost, and what's kind of the timeline when somebody reaches out to you to get in there, get the property taxes protest, and then hopefully get some results?
So in years past, I've only ever taken a certain number of clients every year, and that's so I can put my own eyes and hands on each file. So there is a limit to the number of clients that I will take each year. And last year, because there was such an egregious increase in the values, and a lot of that was from that huge bell curve of sales during the summer, you know. But last year, a lot of people missed the registration deadline. And so this year, I actually...
Which was it even pushed back a little bit last year?
It wasn't, it was actually shorter. So
Closer
last
to
year
COVID.
was the first year that I had to close registration at the end of April.
Okay.
Normally I run it, you know, through like at least the first week of May or the second week of May.
So now's the time.
So now's
Got
the time.
your slips.
Yeah, so normally I open it on the day that TAD will publish values, which is April 15th. And so last year I had 15 days of registration and my firm was full.
Okay.
And this year, because I want to make sure that the people who missed it last year can get in, I actually opened registration early this year. And because we don't have the 2024 values, I don't have any values to go off of for pricing. So my firm, we decided to offer an incentive to get in early. So not only will you get the biggest discount my firm will ever offer, which is 15% off of the flat fee, and the flat fee that we charge is based on your market value. So it's all on the website, very transparent. Pretty much everybody at this table is kind of a no-bull type of person. Anything you ever want to know, you can find on my website or call and ask. But the pricing is right there on the website. So you'll get 15% off of the flat fee for registering early. And instead of using your new proposed value that's going to come out for 2024 in April, we're going to use last year's value. So wherever you were last year, that's the value we're going to use. So it's kind of like a double discount if you get in now. So that opened on February 20th, and it will close when TAD publishes values. When TAD publishes values, the system will reset, and we will be using the 2024 values to determine what your flat fee is. There won't be a 15% discount. You don't need a promo code for the 15% discount. It's already there. It's already applied. So you just put in your 8-digit account number, click file protest. Most of the information is going to be pre-populated in there. It's pre-populated because TAD is particular about the forms that we submit, and they need to be matchy.
Okay.
And then just move on with your day.
Okay.
Last, I'd want to add on the legal end of tax planning and tax strategizing, because you brought up mortgages and you asked me about due on sell. Again, not getting in the weeds there, but there are implications that you need to be aware of when there is a loan encumbering your property. If you borrowed to buy and you haven't paid that loan off, that's a contract that you signed with whoever lent you the money, that the discussion needs to be had, whether we're deeding your property into a trust, into a child, they better be 18 or over, wherever. There are not just tax implications, but contractual implications between you and whoever you borrow from.
Yeah, and that's one of the reasons why I refer my clients. I mean, trusts and stuff like this is all stuff that I know as well. Martin and I went to law school together, and while I could probably handle some of that stuff, I would rather just not take up that brain space and just send it over to Martin, and he can take up his brain space with all that information. But I send a lot of my clients over to Martin, who want to put their property in a trust, or they want to purchase a property, and they're going through both. They want to purchase a property, they already have a property that's their homestead property, but they want to purchase this other property and their college age kid is going to live in there, and they want to figure out what are the tax implications, how can we reduce our tax liability for the long term. And that's why us three are kind of work together, because we can refer to each other, and we all have those little pieces of the puzzle to help taxpayers and property owners reduce their long-term tax liability. And one of those things is putting your property in a trust, having a beneficiary that's your college age student. They can claim an exemption and reduce that tax liability.
We flipped the script too. We've talked about beneficiaries being the youngsters, but
or
also
your parents.
right other tax strategies that we take care of here. After or before Melissa's protest is think about your parents, aunts and uncles, grandparents that are over 65 that we can benefit off of a huge tax discount, because you're not quite there yet, but there's a property that can be deeded into an elder, 65 or over, if they don't have another homestead in the state. So
and in a lot of those cases, correct me if I'm wrong, but let's say that I have my homestead property and I have an investment property, and let's say I have a loan on that property or a mortgage on that property, and I decide I want to put it in a trust and allow my over 18 child to live there rent-free and all the provisions of the tax code to claim an exemption. Would that trigger my due on sale provision?
Well, it's again a contractual item, obligation between you and your lender. Would it trigger it? It's hard to tell whether
The part of your
whoever lent
services
you
are reviewing that, right?
reviewing it, who lent, and are they reviewing the same records that you do with the county? One thing is whether we can do it, sure. One thing is whether they're going to not allow it and enforce their contractual rights to call your note due.
So that's why it's important to consult with an expert, because it's never going to be a yes or no, and especially with attorneys, we know that the answer is it depends. We've got to look at it and read it and make sure and see if there's any nuances in there that are going to trip us up. But I think that's all I have to say on that.
Do we have any other points that need to be made?
I had a couple of things here, but I think I just want to end on the fact that there is an election coming up. Did I mention this earlier?
We didn't. I was about to jump in, but we were talking about insinuating that when the Fed might change rates again. Hey, it's election year, so that's a good
So, and another election that's coming up that would be different than the fall election is going to be this election on May 4th. And the legislature wrote into the law that each appraisal district that has, I think it's 75,000 or more taxpayers or property owners, has to have, they have a board of directors. So right now the board of directors has 6 positions, and each position is essentially one of your taxing jurisdictions. So the school district, the hospital district, the water district, each one of those districts is represented by somebody on the appraisal district board. And as you know, what their main goal is to make sure that whatever revenue that they budgeted to have for that year is captured. And so when you're looking at that picture, that doesn't really say taxpayer friendly, So what they did was they said, we're gonna add 3 more seats to this board of directors for each one of these appraisal districts that has, a certain population that's over this number. And in Tarrant County, that is the case. So on May 4th, there's going to be an election to elect 3 members of the general public to also serve on that board as representatives of the general taxpayer public. And we need people to run for those positions, people that are going to go in there and they're not going to be afraid to, use their voice to affect change, make sure that things are being scrutinized, that we're not just rubber stamping everything that anybody says up there.
We're making
accountability.
Sure. Yeah, right.
Yeah, and that could
trying
be
to
you
fill the
that
budget.
jumps in and helps.
Yep.
Yeah.
Well, all right, guys, we would love to be in your corner in Tarrant County. If you are a homeowner and need assistance with property tax, I think we all kind of understand at this point that we could use some of that. Melissa, Martin, and myself would love to be in your corner. We hope that this was educational for you and beneficial for you. And also, if you are listening to this and you know somebody out there that might benefit from this message, if you would please share this video or just share our names, we would greatly appreciate that. We hope that you guys are doing well. Have a lovely and prosperous 2024, and keep looking out for our videos so we can come and share more information with you guys.
Absolutely, thank you.
And don't forget to register early, because I get so many emails and it
Very
really,
true.
like, I don't know, I'm a pretty empathetic person, so I'll get an email late and like, can you please help, and just
It is
can't
true. You
after
have
the
to
call.
cut it off.
Yeah.
So
Timing.
get in when you can.
Engage with us here once you see it on social, and
Yeah.
one of us or one of our team members will obviously be in touch.
Perfect. Okay, guys. See you out there.
Take care.
Bye.
Thank you.